Dalal Street gives negative returns this week with the Sensex and the Nifty falling under 1%. 35 Nifty stocks post losses this week. On today's edition of Editors Roundtable, we put the spotlight on the week gone by, and we also talk about the top EPS downgrades as well as upgrades this earnings season. I'm Surabhi Upadhyay, and with me on the show are Prashant as well as Nimesh. And today we have with us Nilesh Shah of Envision Capital joining us right here in not the studios, but in our newsrooms. We always love talking here because it's more informal. But thank God it's Friday. Week is over. A week without too many mega headlines or mega outliers, right? But
well, we were going through the week, it was seeming
it's huge. IndusInd Bank and whatnot. That's true.
Idea. And actually,
Yeah.
as we look back, it seems like, as you said, a quieter kind
The
of
numbers are like, kuch nahi hua. But the headlines were heavy.
and you will sort of go through the numbers, but actually
Yeah.
it's been a pretty decent week because last week was very, very strong.
Yeah.
Mid-cap index last week was up 7, the small-cap index was up 9. And this week, if anything, we are flat to slightly higher.
Correct.
So all told, Friday to Friday, not bad.
And actually because markets have not reacted, Surabhi, we're missing out on the global headlines. Actually, global gave us a lot of headlines, right? Especially on the bond market side.
Never missing. Prashant is there on the global
Exactly.
headlines.
So,
Never.
So I think that's something which the markets have ignored this week. The bond yields globally, US as well as Japan and everybody else. So I guess that's something which one needs to take an account of. But otherwise, yeah, in terms of corporates or in terms of for the domestic cues point of view, I think apart from earnings, the other big headline to me was the kind of blocks and the way promoters are aggressively selling out. So
Yeah.
that was a big headline for me.
So, whatever there's a global bond deal, and I think Nilesh would also agree, people say bond deals and, recession and tariff. And towards the end, everybody there's too much foreign interest in India.
Yeah.
And that is true. Actually, people I know a senior banker who was marketing in the US recently came back 2 days back. He said just a lot of interest. And the general view seems to be that a lot of foreign money will leave US assets over the next 3-4 years. Mm-hmm. How much we will get, we don't know. But basically, it'll move out of,
US.
Out of the US because US gets 75% of all money. Yeah. So even if a small amount of it gets out and a smaller percentage of that small amount comes to India, that's the broad kind of narrative out there that, earnings growth, etc., is not spectacular to talk of, and we'll talk more about that. But it's just that there's just a lot of liquidity, a lot of money.
That's true, and the color of money is usually quite green. I'll come to the week's movers and shakers and numbers in just a bit, but Nilesh, opening thoughts, feeling what, positive, neutral, negative? I don't think anyone is, but your sense?
Yeah, absolutely. No reason to be negative. Every reason to be positive or maybe even neutral. Earnings have been relatively fine. Yes, take out a few of the large caps, which obviously the earnings were not up to the mark. But otherwise, broad-based earnings has been, I think, good. Liquidity continues to be very good. The macro tailwinds continue to be strong. Inflation trending lower. So I think right now there's really no reason to kind of be negative. If at all, I think there's every reason to be positive.
Lovely. Sounds good. It's a good sort of note to begin on. So let me quickly recap then, the numbers for the week and what we saw in terms of the final performance. So it's been a week of consolidation, and actually thanks to Friday, the week is looking much better because up until Thursday, the market was down between 1.5% to 1.6%, depending on which index you were looking at. But after Friday's up move, where we were actually outperforming a lot of global markets as well, the final numbers are looking good. So the cut on the Nifty is just 0.6%. The cut on the mid-cap index is exactly similar, just about 0.6% as well. Small caps have actually done better. Small caps have seen, gains. So the micro cap and the small cap market, stock-specific level, that's really alive and kicking. 0.5% up on the small cap index. Now, top sectors of the week. Real estate, 2.7%. DLF did a lot of the heavy lifting here, by the way. Within the realty index, it was the best performer. Defense, of course, even this week at an index level, maybe it was far more narrow. For instance, a stock like Garden Reach Shipyard did very well. The sector was up about 2%. The capital market plays were thriving on Friday, in particular names like Angel and BSE. So 1.6% up on that index. PSU banks up about 0.5%. On the flip side, consumer durables lower this week. Auto lost about 2%. IT was down about 1.5%. Oil and gas losing 1%. And FMCG, we had accidents like Colgate, remember? So there was some, shake off on the FMCG side of the market. It's been a week that's been defined by earnings. A lot of the mega moves in the defense stocks were also behind us, barring one or two specific names. But it's been more about earnings. And we had, both accidents as well as outside surprises. Accidents, like I mentioned, Colgate. And a complete, outside surprise would be Honasa, for instance. After a totally bombed out stock, on Friday it was finally up almost 20%. So good going over there. The bank Nifty has been absolutely flat for the week, and that's the problem for the market, that the clear sense of leadership seems to be missing. We don't have either IT or FMCG or banks, any of the big sectors providing defining leadership, and we'll talk about that. Finally, I'll come to flows, because going forward, obviously, a lot of the global US bond headlines will drive the action, so will flows. To go back to Prashant's point, now the tally is very patchy for the week. You have one good day and one bad day. So if you can maybe pull up the numbers for the week so far, till Thursday. Monday was negative 500 crores. Tuesday was a negative 10,000 crores. Wednesday was a positive 2,200 crores. Thursday again was negative. Now Friday we'll see if today's move is backed by big cash market buying or not. Overall, May still good. May FPIs have been net buyers to the tune of 19,000 crores. But a lot of that perhaps would be because of the block trades and the other action that Nimesh talks about. We still have to see if the secular return of the FPI in terms of cash market buying has come back or not. So that's the week.
Nilesh, what have you been doing? What's on your radar? What's keeping you busy?
I think earning calls.
Yeah, absolutely. I mean, the earnings calls, the earnings season, especially the mid and the small cap side, I think it's been a wonderful quarter. I think most companies have probably given or delivered returns in earnings in line with expectations, or probably even beaten. While we say, for example, defense, we talk about this whole thing about what happened at our borders. But in general, most defense companies came out with good numbers, good quarter, despite the fact that the order inflow has not been phenomenally high for them. But they still managed to kind of do it. A lot of the engineering companies, I mean, they came out with good numbers. I mean, despite the fact that the financial year gone by has not been a great year from a GDP point of view. A lot of the smaller consumer companies actually bounced back really well and delivered a great quarter. And the other thing that we are seeing for many companies is significant improvement in terms of their cash flows and significantly better capital efficiency. And to me, that actually becomes pretty much a prerequisite for a re-rating in them. So while we think that mid-cap, small caps are expensive, and that's part of the larger narrative, but on the whole, there's strong earnings push coming in from there. I think most of them have guided for a strong year ahead as well. And clearly, most of the manufacturing defense side, they continue to kind of be extremely optimistic in terms of the outlook for the next maybe few quarters.
This is the universe of stocks you own, Nilesh, which have
both own and the ones which are on the radar. I mean, even if I were to kind of look at some of the digital platform companies, I mean, they still continue to be very, very strong. So it's not just about, earlier we were very dependent on export-oriented companies or anything like that. But right now, I think the domestic side, I think, is looking very, very strong. A combination of both digitization and indigenization. These two essentially are powering a lot of the mid and the small cap companies.
So, Nilesh, when you hear a lot of the con calls, especially in the broader market names, the mid-cap and small caps, what is the key takeaway? Why are they turning so bullish, or why the commentary is so strong? Where they see, the management see the growth coming in? Is this going to be purely domestic plays, or there's going to be a bit of export push as well?
Largely domestic.
Okay.
And I think what's really happening with the mid and the small cap companies is they are able to kind of get an increasing larger pie in the overall scheme of things. So they're basically gaining market share from the big players. So if you were to look at FMCG, that's precisely what's happening. Yeah. The big guys are struggling, they're getting challenged by the smaller guys. If you look at banks, financial services, you see that across the board. You look at even all the guys who are digital platforms, guys who are adopting technology, across the board you're really seeing, while the headline GDP is growing at 6-7%, the larger guys are struggling to keep pace with that growth. But the mid and the small guys, the emerging guys, the challengers are growing in double digits. And that's something which I think is quite phenomenal and seems to be very, very sustainable.
So Fino and Paytm, right? The two.
That's on the payment side.
On the payment side.
Yeah, I mean, on the payment side. Again, look at it on the payment side. I mean, these are businesses which are still growing at 20 to 30%.
Yeah.
And on the digital others, which are the names?
Even if you look at, say, for example, I can't take specific name, but say, for example, the insurance distribution platform. I mean, the business is still growing at 30%.
PB, of course.
Yeah, I mean, that's growing at 30%. We own another name called Car Trade. That again had a phenomenal quarter. I mean, revenues growing in high teens and earnings growing in double digits. I just think overall, I mean, these are proxies for domestic plays or domestic economy.
No, I think it just absolutely ties in with what we've been hearing, that going forward, this is going to be a stock picker's market. I mean, if you have the right stocks where you're talking about some of your companies, portfolio companies or stocks on the radar, earnings are coming in. But if you're looking for that easy, one big headline narrative, just buy the sector and make money, probably not that kind of a market anymore, right?
Yeah.
Car trade, Nilesh, is they recently acquired
OLX.
OLX.
They acquired OLX.
Okay.
So that's not yet fully kicking in terms of the overall business. That is something which still, essentially, while they've managed to turn it around, but in terms of its contribution yet, I think it has a long way to go. So clearly, I think each one of these businesses, I think they're doing fantastically well.
You know, let me ask you, I'm not sure if this is a portfolio stock or not, but if you can just generally talk about this, Protean, which was a casualty of the week. And I think it came out of nowhere. A lot of people have been very bullish on the stock. But this whole situation with PAN 2.0, I mean, I don't know if you have a view on the business, on the company, but any thoughts here?
No, in fact, we've been tracking it. We owned it earlier and we exited quite a while back as well. And I think the challenge out there is that the existing businesses are kind of probably at best growing in single digit. That's the challenge. They have yet to find a business. So while they have many optionalities, which they have worked upon, but none of these are yet firing. So for example, they have a massive kind of involvement in the whole ONDC.
ONDC, yeah. The management spoke about it.
Yes.
It's very small though. I mean, right now it's only contributing 7-8 crores.
Correct. So that business has yet to kind of scale up. So that's the challenge. And on top of that, the valuations are not kind of compelling or cheap. It still trades at probably 50 times trailing earnings. It's fine. I don't think there's an issue with the valuation as long as the business is growing in double digit. The challenge for them is that overall revenues are not growing in double digit.
I think you know, Nilesh, in this earnings season, what stood out for me as well, you know, even if it's an expensive stock, but if it's delivered the results, if it delivered growth, the markets are latching into it. You know, there are so many stocks which have hit 10%, 20% circuits for 2-3 days on the back of very strong growth. So if there is a growth, I think, I guess there is a lack of ideas as well. People are struggling for good ideas, so they're willing to buy and pay premium for a good earning.
Absolutely.
Have you seen that? Have you observed that?
Yeah, absolutely. That's been the theme. I mean, you know, we kind of keep debating in terms of valuations. But I think when managements deliver, markets, I think out there are willing to pay back.
Willing to pay.
In the sense, in terms of re-rate, disproportionately reward.
Right.
You know, what I'm going to do is just also look at a few other names, specific stocks, and maybe we can ask Nilesh to weigh in. So these are, so the earnings season is largely behind, and these are the top upgrades and downgrades, EPS upgrades and downgrades for FY26, which have happened over the last 1 month, essentially. So, you know, typically would cover the entire earnings season. Now, I think, just to caveat, not all of this would be earnings related, but I think bulk of it would be earnings related. So, NSE 200 is the universe, top downgrades and upgrades for FY26, and this has happened over the last 1 month. So let's get started. Look at the downgrades first. Cochin Shipyard, and this was surprising to me. It's one of the strongest run-ups that we've seen. Earnings, and these are all Bloomberg numbers, consensus earnings for FY26 have been brought down 36% for FY26. I don't know if there is a one-off or something, but minus 36% for Cochin Shipyard. Stock's gone the other way. I think it's up 30% in the last 1 month. Adani Enterprises is number 2. It's down. Earnings have been brought down about 30%. Siemens, there is a 24%, downgrade of earnings cut for FY26. Swiggy, again, I've sort of tried to lump these businesses together. Swiggy is 33% lower earnings for FY26. All Bloomberg numbers. Zomato, 23%. IndusInd Bank, of course, I think we've seen widespread earnings cuts, 27% cut to FY26 numbers. Then a few banks, Union Bank, 15%, IDFC First, 14%. Bandhan, over the last 1 month, has seen a 13% downgrade to numbers. Bandhan, of course, has been guiding that things will look much better starting the third quarter this year. Motilal Oswal has seen a 20% downgrade to earnings. So, again, this is surprising. Jubilant Food, 13% cut. Phoenix is 13% cut. Biocon, 19% cut. BHEL, 12% cut. Vedanta even has seen a 12% downgrade to FY26 earnings. Now some upgrades here to FY26 numbers. Bank of India comes up as a top one, 32% upgrade to to its earnings. PFC, a 17% upgrade. Indian Bank, 8%. OMCs have done well, and I think we've seen some upgrades. BPCL, a 14.5% upgrade. Adani Energy Solutions, 13% upgrade. JSW Energy, a 10% upgrade. There is Mahindra, MRF, TVS, Exide. Between 5 and 12.5% upgrades here, the entire auto pack. BSC seen a 10% upgrade to F526 numbers. Godrej Properties. There is Solar Industries. I mean, that, we've, of course, talked quite a bit about this one over the last fortnight or so. Kalyan Jewellers has seen a 7.5% upgrade. Lupin and ABB about 5-6% upgrades each. So, that's the bulk of it, both downgrades and upgrades. Nilesh, anything stands out to you out of these?
So I mean, the upgrades, at least what it looks like, I mean, one was the PSU banking pack, and obviously they'll probably make with interest rates coming down, and they have a large bond portfolio. I think probably they stand to benefit from that. The other
PSUs, there is auto.
Auto, again, I think is that auto's coming off, I think, a low base. Last year was not particularly great for the auto companies. And if rate cuts do happen, then I think that's a positive. Also, I think directionally, when we've seen crude oil prices kind of soften, basically auto tends to do relatively well. So probably there are some of these things which are going. I mean, a lot to do with macro. The macro is getting better. That's kind of having a spillover effect on some of these sectors.
It's Swiggy and Eternal, 30 and 20% downgrades to...
Because of and that's the debate actually.
Because of not the full delivery, but the quick commerce.
Yeah, I mean, that's really sad.
Yeah.
So because I think what had happened was that earlier both the platforms had guided that we're going to open more dark stores. Yeah. So they had pretty much preponed their entire dark store rollout. And that's beginning to be seen, number one. Number two, I think it's also by choice that they decide to basically discount more. It's part of customer acquisition. You want to kind of be there before the other three come in, which is the Amazon, Flipkart, and Big Basket. So I think it's a very, very conscious strategy. I mean, it's a playbook that they're very familiar with, that this is the way they want to do to weed out potential competitors. And I think as a strategy, it surely makes a lot of sense. So you could probably have a downgrade for a year, but after a couple of quarters, it's quite possible that you'll again see upgrades there.
Cochin, any thoughts? Do you track it?
No, I don't track it. But what it could be is that I think shipbuilding is a very long drawn business. You have these are like execution cycles which run into multiple years. And if probably just because there's been a delay by a quarter, it just spills over from one year to the next financial year. I presume it could be more to do with that rather than anything else. And the fact that the stock, despite the downgrade, has kind of moved up, somebody's probably taking a view beyond a year or so.
I remember Sanjeev Prasad, I think it was Monday or Tuesday, he was with us and he singled this out as an example, not gave it as a call. But he said, I mean, everything and more is already baked into the stock price. That day the stock fell. But then there are enough takers, enough buyers as well, I guess, in the market. Okay, we have to take a very quick break on that note. Come back on the other side, we continue the discussion.